What's up everybody, Americana back here with another video. In this video, we're going to talk about two things. We'll talk about what I think the Fed is going to do next. And I don't think it's up for opinion because I think the data speaks for itself. But we'll also talk about why I think it's a miracle that Bitcoin and crypto even got where it's gotten so far this cycle. Because when we look at the environment of credit and liquidity, these are typically environments that are not conducive for serious risk on rallies. But that all might be changing very soon, and we'll talk about it in this video as well. So let's go ahead and dive in. All right, guys, like I said, these topics might seem like they don't connect, but I promise you they do. So keep in mind that everything we're going to be looking at today is results of the behavior that we've seen from the Fed over the last couple of years, but it also tells us where they might be pointing next, despite what you see in the headlines and despite what you see currently being priced in on these different expectations for what the Fed is going to do. When we look at how price has actually played out, we've seen some nice moves from Bitcoin. We've seen some nice moves from the crypto market, but really lacking that true risk on rally. And this is something that we alluded to in another video this week when we pointed to Bitcoin's Bollinger Bands, these kind of low volatility signals from Bitcoin. And I think this chart does a good job of summing it up. So this is 5-year forward-looking inflation on the top half. And then then we have Bitcoin underneath right here. Now, contrary to popular belief, it seems simple to me, but a lot of people don't understand this, is inflation is actually good for your assets. Inflation up to the point where the Fed is going to pivot policy and go more restrictive is going to be good for your assets. It's the reason that we own assets at all, is to protect against inflation, to outperform inflation. When we get inflation, the US dollar is going to go down. How do we denominate our assets? Bitcoin price in US dollar, Z stock price in US dollar. So contrary to what people believe, seeing some inflation show up is actually going to be good for your assets. And we've seen that in here when forward-looking inflation has started to turn up. Forward-looking inflation has started to turn up. This has been some of the better times in Bitcoin and crypto. We can see that in here, inflation turning up in there. When it has been down or sideways, this has been tougher times in the market. You can see it kind of topped out really right in here into that pivot from the Fed that we got in March, April of 22, but we've been flat since. So we haven't seen that same spike. Do I think this is on the horizon, that we do see some forward-looking inflation start to spike up in here? Absolutely, I do, and we'll talk about that in this video. But looking back over the past couple of years, and even when we found this bottom in here, I can say this has not been the typical environment that we see Bitcoin do well. Obviously, I can't say that we're not moving down, so it's not meant that that Bitcoin is going down with it or through a typical bear market that we've seen in here. We've just been stuck in this regime of sideways. So what's been driving inflation or keeping it steady? The Fed has, loosened up slightly. We've seen a couple cuts in here. Well, we've had, things like war, still some supply chain issues even after COVID, a variety of different things keeping inflation relatively elevated. And again, we'll talk about that later down in the video, but I did want to point to this. If we see this is some sort of local bottom in here, and this can be the uptick that we're seeing reflected over on the momentum side of things in crypto, then maybe we can get out of this environment. Maybe that's what leads to a conclusion in our low volatility regime. But I did want to point out maybe one of the reasons why we have been subdued is we haven't seen this inflation show up, which Bitcoin is designed and created to protect against, which we've seen a few times throughout Bitcoin's history in here. Now, do keep this in mind, because now this is a little bit about why Bitcoin might be where it's at. Let's talk about why I think the Fed is a lot more pinned than people would care to comment on or would care to say. You guys can pull it up for yourself, but pay EMS. So this is non-farm payrolls. Now what you're going to do is you're going to add this rate of change indicator in here. You do need to change this to 12 because we're going to go out to 12 months, and you can see I'm on the monthly chart in here. Now what I'm also going to do is add the Dow Jones as well. So we have some sort of risk on signal to track in here. Now you can see every time we have flipped negative on our rate of change, you can see it in here as well. Every time we have flipped negative on rate of change for non-farm payrolls. 2 of the times it has been a recession. Another time, yes, had this kind of slow grind up, not conducive of true risk on at that moment, but also flagging to recessions as well, which I think is important to note. You could say the same thing in 2020, but obviously that was avoided by massive cuts from the Fed, and the world did continue on. Not everything stayed shut down as we thought it might. But I do want to point out where we have been as of late. We have been riding this line of recessionary territory. Now, why is that important? Because the Fed, if you guys don't know by now, obviously they get on every single time they say we have a dual mandate of employment and inflation. Well, this is one side of that equation. Non-farm payrolls. If non-farm payrolls are going up, more people are getting jobs, people are getting paid more for those jobs. If non-farm payrolls is flat or declining, jobs are vacating, jobs are leaving, whether they're going overseas or being consolidated, and or people are getting paid less, right? So if you're the Fed, let's put ourselves in the Fed's shoes for a second. If you're the Fed and you are looking at employment on the verge of collapse, and you look over at 5-year forward-looking expectation and you see that hasn't forward-looking inflation expectation, you see that hasn't moved at all, which can are you kicking down the road first? I think it's going to be inflation, because if not, the consumer is already hurting. Things are already more expensive. That inflation is always going up. We're simply looking at the rate of change, but that compounds year after year after year. So is the average consumer in the near term going to be more hurt by a lot of people losing their jobs and or getting paid less? Or are they going to be more hurt if we kick that can down the road a little bit longer? We do some sort of stimulation, whether that be cuts, whether that be joint efforts from the Treasury as well. It doesn't necessarily have to be just blatant cuts from the Fed. They can be adding to their balance sheet. They have a lot more tools at their disposal than they might play like they might make known at any given point in time. But if you pay attention closely, that they can do a lot of different things to induce some stimulation in the economy. So if you are the Fed, this is a lot bigger risk, in my opinion, than that 2% inflation mark, because this has pretty much guaranteed, right, over the last at least 2 periods that you are in some sort of recession. So looking over to CPI, let me clean this chart up just a little bit for you guys. So we'll leave the Dow Jones on here, but I also want to add Bitcoin as well. Bitcoin to the mix, because again, we are looking at inflation. So this kind of ties into that forward-looking inflation. This ties into what the Fed is and could be doing. We have seen over the last few weeks and really the last month or so, Fed has been announcing that they're adding to the balance sheet and adding to the balance sheet. We've seen inflation start to pick up a little bit. Obviously, we have war, we have oil increasing as well. So people can speculate as to what has caused this. I need to change some of these markers on chart in here. We can also look at previous times where we found these different pivot lows in inflation and what that's meant for the market, whether that be Bitcoin or the Dow Jones. Okay, so I can go ahead and remove these in here. I just want to focus on these levels. All right, so this is kind of a funny one because I think it puts bears in a tough place. I might ask a bear, hey, what do you think about inflation? Do you think it's going to go up or down? And they might say, oh, it's definitely going up. Inflation is definitely going up. And I would agree with that. I think it is likely that we see inflation go up, because I think it's likely that we see some stimulation from the Fed based on what we've seen over in the labor market. Now, if we both agree that inflation is going up, what has this meant for markets when we've seen some sort of pivot low in inflation? Obviously, there's different little lows along the way, but I think we can play it fair and just mark out the more major lows. So what do we have in the Dow Jones? We have nice appreciation. This is recovery after 2001, right? And we have this inflation-led rally in assets up until the 2007 peak. Okay, same thing for early Bitcoin in here. You can see when we start to see this rise in inflation, that's when Bitcoin's doing really well. We're seeing appreciation in assets. And the same thing shows up in 2020 here as well. So if you're a bear and you're going to say, oh, well, we're going to have all this inflation, well, I say, all right, bring it on, because maybe people don't actually know what that's meant for markets. And again, though we do have a small uptick currently, this is 12-month rate of change, you can see that this has been on a steady downturn. This has been on a steady downturn while we have employment dangerously close. So if we are going to have to stimulate somewhere, where is it going to come from? It's very likely going to come from this inflation driving us up. Employment gets saved. Everybody is happy. Fed pivots policy in here. Inflation kind of starts to come down. Maybe employment comes down as well. And we have to reassess at that point in time. But yeah, I think that is kind of the points that I wanted to make in here. Hopefully that was a good little quick refresher for you guys who have been following this video on why I think the risk comes from the labor market. Hopefully you guys can see that when the risk is on the labor market side, and we can kind of deduce that the Fed is probably going to have a little bit of a looser policy, whether that mean actually cutting rates more than people expect or some other form of stimulation, what that has meant for inflation. And I think bears would agree that inflation is going up. But then again, what that inflation has meant for markets, what that inflation has meant for Bitcoin is important to know as well. All of that tying into 5-year forward looking inflation. When we start to see that tick up, it's likely conducive that the market is extremely hot or heating up. That's the environment that you would actually expect to see Bitcoin and crypto do well in. And that's something that we haven't seen this cycle. So all of that tying in together. And I hope you guys did enjoy that video. Do make sure you guys follow me over there on Substack. We do a free weekly newsletter. We're going to have a paid subscription over there as well. Make sure you guys are subscribed and have notifications turned on. Hopefully you guys enjoyed. Let me know if you guys have comments, questions, concerns. I'll see you guys in the next one. Peace out.